Now let's go through multi-entity workflow. Be sure you have already watched multi-entity setup. So now that we have set up inter-entity account mapping and we have turned on bill back templates in accounts receivable, and we have set up an elimination entity in our entities area, now we're going to talk about and show how the features work with multiple screens. Okay, so let's go through in the accounts receivable module. We're going to go in and show the bill back feature. So what this is if you create an AR invoice and you want to charge rent to one of your other entities, it's going to create the AP bill automatically. Okay, so I'm going to navigate to our bill back templates first and show the setup of an example of a rent that is charged between two companies. So I've already set it up here, called it intercompany rent. So normally you're going to just hit create there. You're going to type an ID and a description. And the invoice GL account is going to be the revenue account. The bill GL account is going to be the expense account on the other side. Okay. So what happens behind the scenes after when we start using this bill back template is the due to, due from occurs for the offset of these two accounts. Okay. So I'm going to show you the transaction. I'm going to cancel out of here. And notice I'm at the top level doing this. So we're going to be in AR invoices screen. We're going to hit the create button, but again, I've already done one. Now remember, in our multi-entity workflow, the inter-entity customers and vendors are already set up. Okay, so make sure to watch the multi-entity setup to get those set up. So in here, I've created a simple AR invoice. I put a date in, I picked the inter-entity customer. You have to be sure you have set up the inter-entity customer on the company entities additional information tab, okay? Otherwise, this bill back template will not appear down here to be selected. So once you pick the inter-entity customer, you're going to pick the bill back template here. You're going to then have this pre-filled in down here below for you. And it's going to create the due to, due from for you automatically. Okay, so there's the due from rent revenue. So my dev company, my development company is going to get the revenue. I picked inter-entity for Timberline General Construction, inter-entity customer. So it did the due from Timberline GC. Okay, so over here in my bill back template, I've got right next to that my bill number of the AP bill that was created automatically. I did nothing to create this. Okay, so what happened was the dev vendor on the GC side, so the GC company owes this development company $5,000 in rent. So it created the due to Timberline Development and rent expense on the Timberline GC side. Okay, so you do not have to do this. It does do the linking for you, or take me right back to the AR invoice. And notice the numbering's the same. So I can go right back here and then back to the revenue side on the development company. Okay, so the location here is the entity that's where the revenue is going to hit. So that's location / entity. Remember, intact that field. Okay, so just to recap though, because this helps put the picture together, when you set up the inter-entity customer and inter-entity vendor here, it knows it's attached to this entity. And then when you set up the inter-entity account mapping using that entity right here, it knows then to use these due from and due tos. So just to put the full picture together. Okay, so now let's navigate to the pay bills area. We're going to talk about when you pay a bill on behalf of another entity. So let's say my checking account here, this checking account is set up as a Timberline MEP entity checking account. Let's say I use this checking account to pay a bill this $5,000 bill down here, that is actually a Timberline GC entity bill. Okay, so I'm going to show what happens with the intercompany transactions, what it automates when one entity pays a bill on behalf of another entity. Okay, so we're going to do, this payment method here is like an ACH or EFT coming out of the bank account. So we're going to use the Timberline MEP checking account. So that's linked to that one. We're going to come down here, and that was the Timberline GC for $5,000. We're going to pay it. And we're going to just put a small description in here. Hit save. Okay, so now we're going to navigate to where it posted. So posted payments. Okay, we're going to look at this here. And you can see that it came out of the general checking for the MEP entity. It came out of debited accounts payable where it originally was in the GC entity. And then it did a due to, due from. So GC entity owes the MEP entity because MEP paid the bill for that GC entity. Okay, so it created the due to, due from automatically. Okay, now note that I had the inter-entity account mapping on, and I have the multi-entity setup turned on to enable auto inter-entity balancing. Okay, so that is how it works when you pay a bill on behalf of another entity when you have the auto balancing turned on. Okay, now let's say that we are going to enter an AP bill in. Notice I'm at top level still. We're going to enter an AP bill into the system, and we're going to split it between two different entities. So down here, we've got repairs and maintenance. We've got our Timberline GC and our Timberline development entities. And I've split the expense between the two. Okay. So what's going to happen in this scenario? It actually is going to post specifically to the accounts payable for GC and the accounts payable for development. It's not going to do the due to, due from in this scenario. Okay. But the minute that I pay this bill and I use, let's say, the Timberline development account to pay the $1,100 in total. Okay. If I use a Timberline checking account to do that, it's going to then create the due to, due from for the $500 that the GC has on their books. Okay. So as shown previously when I showed the cash transaction. Okay. So at the bill level, it's going to do this until you pay it. If you use one checking account to pay it, it'll create that intercompany for $500. Okay. So I just want to show that. Now let's look at a journal entry. So in journal entries, if I decide to split out, let's say, an accrued bonus between two different entities. So we're going to pull up this one I've done here. So I've made a general journal entry to accrue bonuses. I credited accrued compensation payable on the development entity for $75,000. And I've done a bonus of $50,000 and a $25,000 bonus for the GC. Okay, so let's say that the development company is going to pay this $75,000 out of their checking account. Let's say this is something that's the scenario here. Okay, so this was not part of the transaction. It did this bottom part automatically. Okay, so when I duplicate this and show the screen how it looks, this is how it will look before you post. You won't see the inter-entity part down below, but you do your split. So I've got some GC here, some dev. Okay, you do your split here. And then once you post, if you come back in and view it, it will give you that inter-entity automatic balancing at the bottom. So don't get confused. It will not appear until you post, but you can look at it and see what it does after you post. And finally, let's go through some reporting, financial reporting when you are using multiple entities. So first thing I want to point out is in financial reporting, when you're looking at a design, in the columns, you have different expansions you can do for locations or entities. So in a column, for example, in my expand by dropdown, I've got different options here. The location option has different roll-ups. So you can have a very detailed level. So it's going to show all your locations individually with some totals. You can roll up and have your locations summarized a little bit more. So there's different options here depending on your structure and how you set up your locations with the tier in your entities area. Okay. So you're going to see these available when you're expanding by that dimension location. So over here in your entities and locations area, you're going to have the hierarchy here in your locations. So you're going to have, for example, Beaverton location is a location of Timberline GC entity. Then I have under that Beaverton Des Moines. So depending on how I pick my levels here, so all levels would show me Beaverton Des Moines. All levels with roll up will probably just show Beaverton. Okay, just play with the levels here for the summarization. You'll get familiar with how these look on your design. But depending on your tree here, your tier, your hierarchy tier, that is going to determine what you want to show here and how detailed you want to show it. Okay. So beyond this, you're going to also have the capability to do location grouping. So over here in the reports area and setup, I have what's called dimension grouping. So in my location groups here, okay, I can create location groups that have different entities, different locations under different entities. So I don't have to tier my entities. Let me show you the tier again. And locations. So I don't have to tier my entities in locations in a very specific manner. I could combine this DROO entity with this NPE LEC North Platte electrical location underneath Timberline GC. So totally different entities. I could make a location group to combine this and this if I want to. Okay, so beyond this structure, I also have this location grouping that I can use if I want to put DR80, for example, and NPE LEC together into one. I have this capability. And how you do that is the easiest way in this scenario would be to pick specific members. You're going to come down here, you're going to find DR80, and then you're also going to find the NPE LEC. You're also going to make sure, don't forget this, to hit dimension structure so you can use that in the report design. Okay. Then you're going to hit save, and that location group will now be available in the financial design to be used. Okay, so where it's going to be, let me refresh here. So when I go back in the filters area, I can now see my new group. Okay, so I can either put it here, or I can just, when I run the report, I can pick it as the location group at that time. So this location field here is going to be locations and location groups. You have this available in quite a few areas of the system. So grouping is available with different dimensions as well. Okay, so these, for example. So let me get out of here. We're going to show what it looks like when you run a financial statement with a consolidating balance sheet, for example. So over here, I've got my location levels, and I have this, I believe, with one level roll up. So what it does is it's taking my entities and I'm not showing all my locations at this time under each entity. Okay. So these are my entities, and notice the elimination entity, since it's doing it alphabetically, I put the little Z in front of it. My elimination entity is showing up here at the end. Okay. Where generally is where I want to show that. So for consolidating balance sheet, you can lay it out like this. I can also make, through that option, I can also make it more detailed. So if I want to show my locations more, I can come in here and I can expand and show these a little more detailed. Okay. So let me come back over here. Okay. So if you do not have domestic consolidation, the consolidation feature on your menu. So if you did not purchase consolidations, okay, so if you don't have this, you can still do the consolidating with eliminating entries in the elimination entity. Okay, so this $26,821, I could make manually into the journal entries area and hit the elimination entity for the location. So how it would look in a journal entry, for example, would be, and I could use the inter-entity journal, so the IEJ. And let's say I want to eliminate the balance of my due to do froms at the end of November. Okay, so let's say and then what you're going to do is you're going to pick your elimination entity for here for the location/entity field. And then you're going to do, let's say it had a $5,000 debit in the due from here. Okay, then you're going to do the credit to eliminate it, and then the offset for the payable, for example, right? Elimination 5,000. And that is how the transaction would look to create to do from elimination here in this column. And that is an overview of multi-entity workflow and the related multi-entity financial reporting.